Schwab Advisor Services is a proud supporter of the RIA Edge podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com. Hi, everyone, and welcome to the RIA Edge podcast. This, as you know, is my chance to speak to RIA principals about the business of financial advice and designing wealth management firms that, in our estimation, are growing by design and not by default. This is our first podcast of 2025, and I'm thrilled to be joined by Michael Nathanson, the CEO of Focus Financial Partners. Michael, thanks very much for joining us.
David, thank you so much for having me.
I really am looking forward to this conversation. I think we have a lot to talk about. I think we're catching you just a couple days after a rebranding, which you all have put together, which I think we can get into a little bit later. But I think it does speak to a lot of the issues that you're dealing with there at Focus in terms of, what maybe is some saw as a sprawling consortium of RIAs and how you're trying to stitch that together. But before we jump into those details, why don't you just, for folks who aren't familiar, if there's anyone out there who's not familiar, could you just give us the brief 101 on yourself and Focus Financial?
Sure. So I have a legal background. I started life as a lawyer, practiced law at a large law firm now known as Wilmer Hale. I practiced tax law, practiced for 13 years, and ultimately found my way to an RIA called the Colony Group, where I spent 10 years, initially as CFO and general counsel, then as president, and then as CEO. And I did that for about 20 years. Had a great career working at Colony, enjoyed every minute of it. It was a wonderful organization. And then ultimately joined Focus Financial. I now serve as CEO of Focus Financial. I first started working with Focus Financial back in 2011 when the Colony Group entered the Focus universe as a partner firm. Focus helped the Colony Group grow from an organization that was just over $1 billion under management to ultimately where it was just recently before we renamed it, which is well over $100 billion of under management. And as for Focus, Focus is one of the largest organizations in the independent advice space. We are just over 6,000 people strong, largely focused on the U.S. markets, though we have substantial international operations as well. And the way I would describe Focus now is an evolved version of what it had been. It was founded in 2004 by three brilliant founders who had a vision for bringing together some of the best organizations in the independent advice space. And starting in 2006, they started actualizing that vision, and they, in fact, did a great job bringing together wonderful organizations on the wealth management side, as well as on the business management side. And ultimately were so successful that they were able to bring Focus into the public markets, being the first player of its type to become a public company. Had a great run as a public company. And then in 2023, the private equity firms Clayton, Dubilier and Rice, or CD&R, and Stone Point Capital came together and decided that they saw an opportunity to bring Focus into the next stage of its evolution, which would be an organization that enabled some of those great firms to come together to embrace not only independence but interdependence, and to allow the firms that wanted to do so to do more for clients and for advisors and the rest of their team and even their communities by joining forces. And in order to effectuate that strategy, decided to take the company private. And so on August 31st of 2023, Focus became a private company and has been executing on this evolved strategy. Has had great success in a very short period of time, consolidating some of the best firms in the industry, while also respecting the firms that chose not to consolidate and enabling those firms to continue to operate with strength and effectiveness, much as they have long operated, but with support from Focus. David, the way we think about this is we call it on the consolidating side, we call it a coalition of the willing. Or another way we like to describe this phenomenon is that we meet advisors where they are. And that's fundamental to our strategy. We've had a great run, and the rebranding that you talked about is a reflection of where we are right now. That rebranding was our statement to the industry and to our clients and to the community at large that we have now evolved our strategy to the strategy that I just described, and that we are now, at least in part, embracing this concept of collective energy, collective capabilities for the betterment of our clients and our advisors.
Yeah, I mean, you talk about interdependence. I think the big difference between the Focus of today and the Focus that we knew prior to the IPO is this hub strategy, right? You've created these hubs, I think 5 kind of hubs around. Well, let's take it back. You had some 90, 100 some firms in the network.
About
Uh,
9.
yeah, and then decided to merge a lot of these firms together if they were willing into these hubs. Explain to me a little bit about the hub strategy and what you hope to do there.
Sure. So to just go out to 90 firms and say, hey, let's have you go and merge with other firms that you want to merge with would have, of course, promoted chaos and wouldn't
And,
have been
and to be clear,
coordinated.
you were one of those firms at Colony.
We were not only one of those firms, David, we were the first firm. This is a vision that I had long had, and I had for many years been speaking about the opportunity that I saw to come together with some of these other wonderful firms that Focus had been able to attract over the years. And and when I learned that our private equity sponsors had a very similar vision, it was just something that was very exciting to me. So yes, Colony went first. We did our transaction to become, as you said, a hub in November of 2023, and then the rest came after that. And I was proud to lead that charge and have Colony lead that charge. The hub strategy. The idea was to be intentional about this. And what we thought was, let's get 2 of our top firms, maybe 3, 2 or 3 of our top firms, and on the core wealth management side of things. So these are firms that we wanted to be full service wealth management firms that had a broad array of clients, and that already had good, strong capabilities. And so we ultimately identified 2 willing firms to do that, and that was Colony and Kovitz Investment Group.
Mhm.
And both had very similar kinds of capabilities, but just different flavors of the same thing. And what we wanted to do was give choice to the other partner firms and let other partner firms decide, well, which one of those made more sense for them if they wanted to merge with one. And then we also wanted to have an ultra high net worth firm be part of that hub mix. And who better to do that but SCS Financial, one of the best known firms that specializes in ultra high net worth individuals and families. And so we chose SCS for that role. So we started with these three hubs, and then the idea was to put those hubs on stage at partner meetings to describe what their capabilities were and to work with firms around the partnership to see if they were interested in joining. And to our great delight, the attention that those firms got was actually greater than any of us could have imagined in a very short period of time, and has resulted in accelerated consolidation. But we also knew that there was still an opportunity for other hubs in select areas of our business. I mentioned business management earlier, and you can think of business management for those of your listeners that are not familiar with the space as these are firms that often have very strong accounting capabilities, but also have other capabilities that go beyond what you would find in a traditional accounting firm. And they can offer the full array of family office services, but also offer services specifically designed to meet the needs of entertainers and athletes and influencers and other people who, in many cases are well known to the public. Um,
Sure. Yeah.
so
Go ahead.
we, yeah, so Focus had long been a player in that space, and so we were pleased that Gelfand, Rennert, and Feldman, one of the oldest and largest and best known business managers, was willing to be our hub for the business management space. And then more recently, this great firm up in Canada, where we have many firms, called Cardinal Point, agreed to become the our Canadian hub. So now we have five hubs, and these are the firms that we're using for consolidation among this coalition of the willing.
I know you also had another international presence with Connectus. Is that still part of the network?
Yes, Connectus is very much part of our network. Connectus is our Australian part of our Australian presence. We have three significant firms in Australia. These are all wonderful firms as well. And Connectus was a firm that we were utilizing to consolidate different organizations in Australia that wanted to come together under a single banner. And so Connectus Australia is an important part of our ecosystem as well. Connectus itself had a larger presence, including a presence in Canada, but we actually merged that into the Canadian hub. And then Connectus had some domestic operations that we merged with our Colony and Covitz hubs. So again, very thoughtful consolidation, thinking about what's best for clients, what's best for advisors, what makes the most sense for all of our stakeholders.
So, this is no small task, what you've done, and I know that there was some pain along the way. There were some redundancies and layoffs to be expected, and but I was speaking to someone who works for the firm and was negatively impacted. I won't say any names, but negatively impacted by the change, and without bitterness. She was like. She praised you as being like the hardest working man in wealth management right now for stitching all this together. What to an outsider anyway seems like a kind of a quilt of many colors that you're just trying to wrangle and get your arms around. Do you think that this was kind of Rudy Adolph's, the founder of Focus's, his original plan for this, right, was to kind of have each of these independent wealth management firms play off of each other, or in a sense, kind of provide a different skill set, right? You bring in the asset managers over here, you bring in the alternatives providers over here, the high net worth folks here, and there can be some cross pollination of skills and client service, I guess, but that was difficult to do with 90 separate firms. Is that accurate?
That is accurate. Rudy had this great vision. He is an extraordinary visionary, and he did want to do that. And he did. He and the team at Focus did begin to create what they called value-added services. And I think there's a lot of great thinking that went into that. And some of that, by the way, still exists today. For example, in terms of trust and estates or insurance capabilities. And that's important. But the reality is that when you're operating as separate advisory firms, the opportunity for true collaboration and true excellence just doesn't exist to the same extent as you is what happens when you bring these firms together. You know, David, at the beginning of your show, you talked about sustainable organizations, building sustainable RIAs.
Hmm.
I often speak about the evolution of practices, whether it's in the advisory space or accounting or legal or insurance or any professional services space. And you have your practices, and a practice is, it's one practitioner, maybe there are a lot of support people, but one practitioner who's basically running an advisory practice. Then you have your collaboratives. That's where you have multiple practitioners. They're loosely working together. They may share a name, but they're really doing their own thing. They may share some common support. And then you have businesses. And a business is where you have multiple practitioners, multiple support people, and everyone has the same mission, vision, values. And that's great. And most organizations, that's their terminal state. They become businesses and they don't become anything more than that. But if you want to be a sustainable business, which I call enterprise, that typically means an embrace of interdependence. That typically means coming together with others so that the organization, while it's reliant on its people, in many ways transcends its people and becomes something that's self-sustaining. I think that only happens when you bring people together. And that's what we have been doing. And by doing that, we can now tell you that Focus has a common vision. Our vision at Focus is to be the leading fiduciary advice company in the world, a company whose clients experience it as a company built just for them, and whose advisors experience it as a company that's equipped them with every capability and resource that only the largest institutions in the world can offer. And we have a common mission now. Our mission is to focus the collective energy and capabilities of leading financial professionals to build a better future for clients, our communities, and the work that we live in. And we even have common values. And at the same time, we respect the individuality of each of the firms that comprises Focus.
Well, let's talk a little bit about that then, because the you say that the number of firms who kind of rose their hands, the consortium of the willing, so to speak, and said, yes, we would like to be part of one of these hubs. First of all, 90 firms, you have, 90 principals, 90 egos. That's kind of tough to wrap your head around already. But more than, I guess about half stepped up to be part of these hubs,
It
roughly,
depends on how you count
I guess.
how
Yeah.
you count them. It's fewer than well. We've had, I would say, more than half have expressed interest in doing this. We have to prioritize our efforts,
Mhm.
and we have to look at each of these firms and be methodical about the when and the how. In terms of the firms that have actually joined, well, this takes time.
Yeah.
Remember, we've only been at this now for about a year,
Mhm.
and we've already consolidated about 20 businesses.
Okay. Hmm.
So as we do this, we only can do so much at once and still be responsible about our pace. For us, David, importantly, it's not just about consolidating, it's about integrating. It's about coming together. And if you're acquiring other businesses and not fully integrating them, well, then you have to ask, what's the purpose of bringing them together? So we're being careful about it, but I do think that there will be. I know that we will be announcing future transactions. We have a very long and robust pipeline of firms within Focus that have raised their hands and that want to be part of this. And again, We also have a number of firms that have said that, yes, it sounds interesting, but not now for us. And we respect those firms and are proud to have those firms as part of our organization too.
So as you're designing the kind of the business side of this, how does it look different from a firm that's said, okay, we were part of the Focus network, we were one of the 90. Now either we join one of these hubs or we stay independent on our, not independent, but stay as part of the network on our own. Is there a difference? Do they join the Form ADVs of these five hubs, or if they decide to join and keep their own Form ADV if they're outside, or how does is there a
Yes.
different kind of transaction that takes place in terms of, the network firms have to pay for the back office technology and the hub firms, or I don't know. What does it look like?
If firms are joining with the hubs, we are bringing forms ADV together.
Hmm.
Again, we want those firms to be operating as one firm. And the benefit of doing that is greater scale, being able to operate at scale, greater capabilities, greater services, bringing the full weight of all of our capabilities together. As for the other firms that are part of our network, our partnership, but have not yet decided or may never decide to join our hubs, we intend to continue to support them the way we have supported them in the past, but even more so. We will continue to support those firms in terms of helping them do transactions of their own, embracing their own form of interdependence as they think about growing both organically and inorganically. But we are increasingly supporting them through practice management, through greater capabilities, through combining resources from our headquarters, from a human resources perspective, a technology perspective. We're engaging in some contractual negotiations with vendors to try to get better pricing for them and for clients. So we will support them because they are very important parts of Focus as well. And that is actually at an accelerated rate in a stronger way than we have in the past. And we want to serve those firms and their clients just as well as we serve our hub firms.
Will the hub firms and the, I guess, client firms, I guess we're calling them, have different technology stacks, different portfolio management software, or will there be some crossover there as well?
There will be some crossover, but the hubs will all be on over time, will be on some version of a unified technology stack. I say some version because we utilize technology to for the sake of clients and advisors primarily. And so we know that there are different needs for different kinds of clients and advisors in terms of how technology is used. And so we're trying to be attentive to that. We are, of course, fiduciaries after all, required to put clients' interests first. And so we do that. But the idea is a common technology stack to the maximum extent possible across the hubs and building common technology capabilities that we can deploy to the other partner firms in platform format.
Got it. Understood. We don't have forever here. I could speak about this forever, but let's take a step up a little bit to a higher level view. Why do you think firms, and it's not just Focus, but other firms have had trouble with the public markets? We know certainly private equity's rapacious appetite for RIAs. Why don't the public markets see it, and why have we had such a hard time getting an RIA into the public markets? Not just USCI Financial, I think, tried. They couldn't do it. Dynasty, I think, had some ambitions to do something similar. If this is such a great business to be in, how come the public markets haven't picked up on it?
Well, I would argue that Focus actually had a good run as a public company. It did well from an appreciation perspective. But I will tell you that I think that the Focus that went public was the first evolution of Focus.
Hmm.
And I think the public market saw Focus as a great aggregation of great firms, but they saw it at that. And they weren't, I don't think that Focus had achieved its full potential from a valuation perspective, though it did quite well, because it was not integrated more, and I think they saw that, and I think that the other issue for firms that are in investment mode and are building and are maturing as organizations is that the public markets have a quarterly focus on companies. You're reporting quarterly earnings. That's what everyone's looking at. They want to see things happening on a quarterly basis, and RIAs are still at a stage of maturation, looking at the sort of the traditional industry curve. This is accelerated because of private equity. Private equity has been a great friend to RIAs and has helped mature the business. It's accelerated that, given firms greater capabilities. And so I actually think as that happens, you'll see advisory firms going back to the public markets because they're more mature. They're larger, more capable organizations, and not necessarily just a collection or an aggregation of different firms or practices.
Yeah. And I think Dan Glazer, who I think is your chairman and from Clayton, DeBillier and Rice, did not rule out the possibility that Focus itself might take another crack at the public markets at some point.
Um,
I know there's no
Sure.
plans to do that now.
It's I don't rule out any possibility for our future. What I can tell you is right now, we are having a great time doing great work, making a big difference in the industry. We are living our mission and our vision, and we're having great success doing what we're doing. And that's what we're focused on at this point.
I heard you say somewhere that now that this rebranding is done and you're underway with this hub strategy, that you'll return to the M&A markets. And I think you have. There's been some of that, but you suggested that you would dive back into the M&A pool perhaps this
Yeah.
year. Is
So
that what's on the roadmap there?
we've never left that. Focus has done more transactions than I believe anyone else in the independent space.
Sure.
We've done well over 300 transactions,
Yeah.
including last year and in 2023 when we went private. We've just been much more focused internally on consolidation and decided to shift our focus, so to speak, to internal consolidation. And what I've been saying is that now with all of the momentum we've achieved there, we can devote more of our resources back into the external M&A marketplace as well. The way I think about it, David, is that during this transformational phase of our evolution as an organization, we're focused on three strategic imperatives. One is to create and generate more services and capabilities for clients and advisors. That's the most important thing. Two is to improve efficiencies, and that's what consolidation and integration is all about. And then three is accelerating growth. Now, growth needs to be organic and inorganic. And so we're focused on both of those areas. But we know what our strengths are. We know that M&A is in our DNA, and we intend to return in force to the external M&A marketplace.
In force.
Yes, sir.
All right. And that kind of leads me to ask a question. A lot of times RAs will go to the M&A markets to find skill sets or services that clients are demanding that they don't necessarily have in-house. Is there anything that Focus overall, the broad network, including the hubs and the network firms, is there anything you don't have? Is there a missing piece to a client service model in wealth management that does not exist under your roof?
I would argue we have all of the capabilities that are core to what clients need, to what advisors need. It's about bringing them together. That being said, I believe that the most successful RIAs are the ones that are never satisfied, that are always thinking about what's the next thing that clients need. And as we think about our capabilities, we want to do more and more for clients. We read every survey out there. We understand that clients increasingly are looking for even more sophisticated investment solutions, more sophisticated estate planning and tax solutions, but also ancillary services to make their lives more fulfilling and easier, like bill pay services and tax compliance services, even travel concierge services or medical concierge services, or or services designed to help them live better and more fulfilled lives, achieving their not only financial goals, but their life goals. And while I don't say that any advisor can do all of those things internally, I do believe all advisors need to be prepared to offer those solutions in some format to clients.
I know we're kind of bumping up against our time here, but I could talk about this stuff forever. When you're, evaluating the firms inside Focus, and I guess you're going to say differs depending on the flavor of the firm, but do you look at any metrics around number of advisors per client, or employee per client, or what kind of metrics are you looking at to see, okay, this is a well balanced operation here versus maybe that's kind of askew over there and we need to tweak it? What kind of metrics do you look at when you're evaluating an RIA?
Yes, we do look we want to make sure that we understand how many clients are working with each advisor. And to be clear, it's more understanding what the number is and in relating that number to the specific service model. Because as we think about segmentation across client size and also across client type and client need, those numbers are often different. And so we do need to be mindful of that, but we look at those kinds of numbers. We, of course, look at client retention. We look at team retention or employee retention. That's critical, of course, as well to us. We look at net flows, but we also look at other metrics that help us understand whether a company is running efficiently. As I said earlier, that's one of our strategic imperatives, and so we look at statistics like revenue per team member. And again, that can change depending on the service model within our advisory firm. But we have a number of metrics that we look at.
Mm-hmm. And real quickly, we'll touch on organic growth because I think this is the thought anyway amongst some is that what fuels a lot of the M&A in RIA land is to cover up this ghost of organic growth that doesn't really exist and maybe exists in 2% in the industry. I don't know. Numbers are all over the place, but certainly a small number of firms are doing far more than that. I'm sure you're in that group. But how do you think about organic growth and balancing that against M&A? And can you give us some insight into which is the driving the value at Focus now? Is it more the organic growth side, or is any numbers you can share there, or on the M&A side?
So I agree with the way you characterized the state of organic growth. There are too many firms that have forgotten that the markets, and in particular the equity markets, have been so favorable over the last several years that they may not be growing truly organically and may just be relying on the impact of financial markets. That is not a sustainable or healthy way to run an organization. I believe that we should be looking at organic growth by looking at net flows, but also looking at other revenue sources and how they're being deployed. So at Focus, we have many revenue sources, not just asset-based billing, though that is by far the largest segment of how we receive revenue. We have retainer-based fees. In some cases, we have hourly fees. We have different models, but often for services like tax services or outsourced CFO services, bill pay services, and other services, especially in the business management space. So we think about growth of that type of revenue as well. The answer for any healthy organization is a good balance between true organic growth and inorganic growth. I liked what you said earlier, David, that the right way to think about inorganic growth is why are you doing it? If you're doing it just to get larger, that's not a sustainable model. That's not likely to be a successful model. If you're doing it to get better, to acquire capabilities, to acquire new geographies, to get great people, it's a very efficient way to hire great people. Well, those are good reasons to do it. We increasingly are very focused on the firms that we are bringing in. Do they check all those boxes? And do they themselves grow well organically? And if not, why not? But what we strive for at Focus is well above industry average. If you think about industry averages, you're looking at that 2 to 3%, and that's the reality of the industry. Focus strives to be well ahead of that, of those numbers.
Okay. One more quick question. I know we're going to get the hook here soon. Your role has changed fairly significantly. I think in the 20-some years you've been there. Now you're sitting in the CEO seat of one of the largest RIAs in the country. Your responsibilities are largely strategic, but also hiring, particularly the executives that surround you. How do you think about that in terms of building an executive team to oversee this business that you're creating? And how do you go about choosing them? What kind of, how serious are we about executive recruitment? Where are you finding the executives who lead this stuff? Because as you know, I mean, the war for talent is well known. We have a shortage of advisors, but we also have a shortage of executives of professionally run wealth management firms. And so how are you thinking about filling those holes?
We use a combination of external and internal recruiting. We have real HR capabilities. We have a broad, large, and deep human resources team that through which we recruit. At the executive level, we often will use executive recruiters. We seek the best possible talent. One of our advantages is our ability to attract high-end talent that, frankly, in many cases would probably not join your typical RIA. But they can join Focus because they see our size, they see our potential, they see our capabilities, they see the depth of the team and the capabilities of the team that surrounds them. We look for people that embrace our values. And our values include service and teamwork and excellence and integrity and execution. But our visionary values, the ones that truly differentiate us, are we're resourceful as thinkers, we're responsive at heart to the needs of our clients, team members, and communities, and we're imaginative in spirit in the solutions we deliver. We want people that embrace those values, but we want the highest, the people who are at the highest pinnacle of their career, people who have already demonstrated great capabilities, have great experience, and can come together and offer their own contributions. And I'll say this as well: we like disagreement. We promote constructive dialogue. We believe that we need to be able to work together and have spirited debates about how we operate as an organization. And that makes us a better and stronger team. And our executive team meets on a regular basis. We have a regular cadence of meetings. We communicate and we collaborate.
Well, that's fantastic. We should do this again because I could talk forever about this stuff. It's fascinating to me. But congratulations on the rebranding. Fantastic work, and the continued evolution of Focus. Michael Nathanson, thanks very much for joining us.
Thank you so much for having me. It's been a pleasure.
And this has been the RIA Edge podcast. Thanks for listening. Schwab Advisor Services is a proud supporter of the RIA Edge podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com.